welcome back to Ferocious Education. This is Ed. Today I'm going to be talking about Bark, going with the ticker BARK. Now this is one of the first videos I'm doing about Bark. Today I'm going to be going due diligence, technical analysis, news, and what I think about this one. So without further ado, let's jump right into this one. So Bark. This one here is one of the latest SPACs that entered into the market, and what better way than to go over the presentation that the management has shared back on May 2021, and if there's anything outdated here, I will refer to it. So the business overview. So what is the market opportunity? It's dogs, and dogs. What makes Barks different? Their strength, and what does Bark capture in the opportunity? The strategy. So what is the market opportunity itself? It's a business of making dogs happy, which is a big opportunity. According to the Euromonitor International, the size of the global pet care market surpassed $120 billion in 2019, with spending in the US growing to more than $50 billion. The pet industry is one of the most dominated by a legacy market approach, CPG companies, and brick-and-mortar retailers, while industries like transportation, health, entertainment have been transformed all online. Now, consumer and centric companies, example Uber, Peloton, Netflix, the pet market is in the early stages of that innovation. The relationship with dogs is evolving in real time. 45% of households reported an increase in happiness after spending more time with their pets during quarantine. 84% of the respondents feel more attended to their pet health. 20% prefer working alongside their pet over their coworkers. 73% are, by the way, don't share that into your coworkers, but 73% are concerned about being away from pets when they go back to the office, and 47% are talking to their pets more. The human-animal bond now more than ever plays an integral role in people's lives. Now, the industry view of a dog's life in a tree: pre-parent, puppy, teen, adult, senior, reparenting, that goes on towards dog food, puppy, adult, and senior. Now this creates an enormous opportunity for a vertically integrated dog-obsessed brand to capture the dog space. Enter Bark. Bark builds deep lifelong relationship with the dogs and their owners. We strive to understand their needs and provide easy, fun, zoomies, and a bit of magic to every healthy day. With a data-driven approach, we are tuned into what is important. This allows us to deliver on our mission to make all dogs happy. What makes Bark different? Well, I guess the rubbing here. But Bark is building a lifelong relationship. So you got fun, food, home, and health. And they basically are divided to the pre-parent all the way to reparenting marks. And you get to see by being there for every step of the way, including sleep, waking up, potty walks, feast, guilty departures, etc. And we leverage relationships and data to drive personalization and cross-sell in our product development. So Bark's key strategy is deep customer relationships, personalization at a scale, strong platform drives cross-sell. All products are designed and developed and branded by Bark, and omni-channel distribution. 1. Bark understands dogs and their people, resulting in deep relationships. So for instance, the basic would go on with emails, journey, etc., dog size, dog names, and happy team, additional toy preferences, etc., and lifestyle quizzes. 2. Bark customers relationships and resulting in lead or insights lead to personalization at a scale. So 1.8 million annual active subscription allows for 250,000 monthly customer contacts, leading to more than 200,000 customer monthly assortments customized. And so proprietary attribution collected, including dog breed, dog size, dog age, location, activities, playstyles, toy preferences, and allergies. And that goes on towards their profile, and then they're also then gone with customized assortments in general. Bark's strong platform, proprietary customers' data, and customer loyalty generates higher upsell and cross-sell. So you got growth lever, high margin, on-site, and in-app enhancements driven by machine learning and fueled by innovative and exclusive product offering. So you get to see by 2020 they already have doubled almost the 2019 results, and by 2021 they anticipate an increase to add to box revenue from $2.3 million to $17.5 million. Quite of a massive jump. Bark is vertically integrated. All our products are designed, developed, and branded by Bark. So you got the play, the food, the health, and the home products. So this leads to higher gross margins in their sales. And Bark's omnichannel distribution creates selling opportunities and drive brand awareness. So in 2012, you got BarkBox and Bark Shop. In 2017, they entered into Urban Outfitters. 2018, they went to Target, Bark Shared, Experience, Amazon, Subaru, and Major. 2018, Glossier. 2021 and beyond, you're looking into Costco, Walmart.com, Dunkin' Donuts, PetSmart, Petco, CVS. And Bark's market share opportunity is enormous. You're looking into a global market opportunity of around $120 billion, with a US market opportunity alone being $50 billion. Current revenue by 2022 estimate is only $516 million in revenue, and you get to see it can exponentially increase to capture a bigger market. So how do we capture this opportunity? Strategic moves to capture the dog company opportunities includes 1. Expand food, home, and health product services. 2. Continue to grow toy and treat subscription. 3. Enhances cross-selling opportunities. And 4. Reach new dogs and their people. 1. Expand the new product services, including Bark Home, Bark Brights, and Bark Eats. And then going on to continuing to grow toy and toy subscription. So that's in the BarkBox and the Bark's Super Chewer. And then enhances multiple cross-selling opportunity, and you're seeing that cross-selling itself with utilizing data-centric models have been working in history, relating to quarter per quarter showing better results. So the last one here was subscription shipments was close to around 3.46 million orders or shipments itself, with an average order value of around $29.25, which also increased from where you're looking into the history. Now they're all above 25, but you get to see the increase in general. Reach new dogs and their people. So basically you're doing that by trying to basically give brand awareness, whether with partnerships with different companies, etc. So looking ahead, transactions timeline, you're looking into currently the stock has changed from SDICC, if you haven't heard about it before, and now to Bark, and that is the SPAC move that we're talking about. In terms of the financial highlights, you're looking into a good growth for the full year 2021 and in the quarter 4 2021. So you're estimating a revenue on the last quarter of the year to be around $112 million with a net loss of only $7 million. For the full year, you're looking into around $31 million. But that at the end, adjusted EBITDA for the fourth quarter 2021 is estimated to be $182,000, which is a year-over-year growth of 121.7%. So that's good in general. They still have some rooms to grow, but you can already see that growth in effect. So momentum across key metrics, you're seeing subscription shipments, you're looking at a growth of 70.3% by the end of the year, and new subscription as well, around 72.5% increase. Now for the full year growth, you're looking into subscription shipments to increase by 52.5%, with new subscriptions increasing by 91.4%, and active subscriptions remaining somewhere around 51.3%. So that's the growth, by the way, not the percentages itself. And accelerating growth and operating leverage, you get to see their estimated earnings or net revenues are estimated to go a little bit higher. So 2024 to 2021 actual, that was almost double. 2021 to 2022, you're estimating almost a double, and then again 3 times into by 2023 estimated. Their adjusted EBITDA is estimated to be around $31 million. And honestly, I'm assuming this is mainly relating towards the SPAC itself. By 2023, it's $16 million, and hopefully at some point it would be positive. Now, quarter 1 2022, you're looking into a net revenue range of around $116 million to $118 million, which would be very positive. And there also you would have around, for the full year 2022, a net revenue of $516 million, with a net loss of $41 million and an adjusted EBITDA loss of $31 million. So how does this compare to Chewy, Freshpet, and Trupanion? You get to see that in terms of the revenue, they're not far off from Chewy, but they are a lot better than Freshpet and Trupanion. So all in all, you get to see that the differences here are mainly in the gross profits by 2021 estimates and 2022 estimates between them and Chewy being at a high discount, as you get to see here in the charts. And so this kind of gives you a good idea about their company. Now we can take a quick look into some important key metrics. So the price over sales and the price over book, hopefully this is accurate on FinViz, but the price over book here is 0.43. The price over book on the SP 500 average is currently around 469. You get to see the massive difference. So there's much room to grow, almost 10 times on the price over book. However, on the price over sales, it's 459, currently 319 on the price over sales. So it is on par with the price over sales, but the price over book, it's very, very discounted. Now, in terms of SEC filings, if you were to go to the last 20 SEC filings, they're basically saying the same thing. Normal things relating to SEC filings, expenses related to that, etc. So I'm not going to go through that. But institutional buyers are very bullish relating to this one, and it's starting to look really good in general. So I don't see any sellings that happened specifically as well after the SPAC has occurred. But again, usually there is a sellout period or a holdout period. Back in May, you get to see 3 or 4, actually more than 3 or 4, a bunch of people selling, but you still have Morgan Stanley in here, Citadel Advisors, etc. still adding into the stock. Now, in terms of insiders, nothing is going on, well, because they already had shares. So before moving on, if you would like to see more contents like this, make sure to hit that subscribe button on the bottom right corner and turn on the bell notification buttons found right here. Don't forget as well to drop a like to this video. And if you would like to talk a bit more about the stock, you can find my free Discord in the description below, and you can find a bunch of people there that are interested in the stock, and you can also reach me there faster. So let's move on now towards technical analysis. Now, from a technical analysis perspective, we don't have enough data points for the 1 month, 1 day, so we're going to do 2 hours and work from there. So on the 2 hour perspective, we're starting to see here that there was a good bounce this week. And we get to see that the MACD did go positive, which is very much of a momentum tracker, and then slipped down towards the negative part. So it appears to be almost dipping downwards into a downtrend again, so be very careful of that, as the moving averages have all turned bearish as well, in that the 30 EMA is above the 10 SMA and the price point is below the 50 SMA. Now what we're going to do as well is try to see where this negative trend would break, because you get to see it is a negative trend. Hopefully we're able to see whether this breaks the negative trend or not, and if it does, then the best you can hope for is at least a short-term accumulation before a bounce back up. In terms of the momentum itself and the willing percent R, they're not looking bad. So the willing percent R generally is oversold, which means in a kind of momentum or a kind of an equilibrium situation, you're going to have more buyers coming in, raising the price up. In terms of momentum, it's very much clinching closer to 0, so I wouldn't worry about that one. And in terms of the moving average bands, this one is expected to trade at 12 on the top, 1091 on the bottom, and 981 on the bottom. 1091 is actually in the middle, my bad. But you get to see that it's still on the lower side of that moving average bands, expected to do or go ahead and bounce back up. In terms of Fibonacci retracements, and the reason I'm using this is because high frequency traders use it. 1055 seems to be the resistance, 1113, 1160, 1206, 1272, and 1357, with the only Fibonacci support being at 962. Now, if you were to go ahead and take a look into a couple hour perspective, you're looking at a price line action of a support at 1004, below there 988, below there you're looking into 968. The current resistances on the resistance levels and price line action you're seeing at 1017 is the next one. A very crucial one at 1029, very important one again at 1055, another important one sitting between 1098 and 1119. Beyond that, you're looking at another important one at 1177, 1213, and then up to 1230, going up to 1271 and 1297. So the downtrend I was talking about really just looks something similar to around this area here. And you get to see, you can actually see that it actually probably is considered broken, as it did go for an uptrend around here, and then followed by a little bit of a more of a pullback in this level. So it is very much complicated. So this downtrend is not really a downtrend anymore, because you get to see they had micro trends within the general outtrend, and it's this original outtrend or general downtrend is no longer reputable or no longer accurate. So you'd have to delete that one. And the current downtrend seems to be going that way, more of a pullback in general, so I do expect for it to perhaps bounce closer to around the $10 level. And the company itself looks like it has really good growth aspects. Their fundamentals aren't that bad at all, they're actually pretty good. So in my own opinion, I do see this one bouncing backwards in the future, and for long-term investments, it doesn't seem bad at all. And they are really looking up for growth, and that's the stage that they are right now. So what do you think about this ticker? Make sure to mention down in the comments below. Share, subscribe, and like, and have a wonderful day. Now, if you're still here on this video, make sure to drop down below and join our Discord. We have a lot of different things going on, including, for instance, members that gives picks for free. It's not pump and dumps, we just things we think about, swings, etc. We also have really exciting bots. You can actually use those ones. For instance, we're just testing out this bot, for instance, that gives you Fibonacci resistance points, activities, etc. And we have a bunch of free things, totally free. We run on tips here, and you can ask me questions, suggest stocks, etc. It's a really nice community that has been growing up very fast at a very good rate, and it's totally free. If you would like to join that one, feel free to do so in the description below, and have a wonderful day.